Good morning, traders. Today is October the 15th. My name is Neville Hornsey, market analyst with YouTrading, and today I'll be taking a look at the euro versus the pound. Okay, as always, going to start with the YouTrading.com Forex heat map, and we'll discuss why I'm talking about the euro pound today. We did have a big green block in the bottom left-hand corner and a big red block up here. So that was, an indication that the London session was going to be a risk on today, where the higher yielding commodity pairs would, catch a bid. The US dollar would basically come down, and the safe havens would also have flows moving out of them. If you look across the Swissy, there's a couple of strengths against the yen and the Aussie, but generally it's red. The yen is clearly the weakest. And then just recently, we've just had the pound catch a bid, and it's the strongest across the board. So the pound and the yen, I could look at that, but I've talked about other sort of CAD yen and dollar yen. So we're going to talk about the euro versus the pound. So if we go to the active trader platform, and then just click on the left-hand side and look for the actual sentiment indicator, you can see here that the euro versus the pound, 88% of traders are bullish the euro versus the pound. So that's an extreme reading. So if we then go to the euro versus the pound on the actual chart, see if I can find it. Here it is. So this is the monthly chart. And you can see that since 2015, so yeah, this dip here, we were in a bull trend. We had the 50 above the 200 even before that. So we had the 50 cross over the 200 period moving average back in 2004. And generally, the euro versus the pound has been in an uptrend with this big correction here, obviously coming down to 2015, below the 200, and then getting back above. You see a breakup, retest, continuation higher. So then we went sideways from 2017 to present day. So why are retail traders bullish the euro versus the pound? I guess it's because it's a support. So if you look at the monthly chart, look for the lows, you can say here is support. And if we go to a line chart, you could even tighten that up and say, this close here from 2017, this close here, 2020, we're just approaching these closes. So, generally you buy low and sell high. If this is a channel and a bull flag, then, traders are expecting that this would be a great buying opportunity. The moving averages are basically stacked red, green, blue. So 20, 50, 200 bullish, 200 is pointing upwards. But if we notice here, the 20 and the 50 are pointing downwards, and it looks like they're about to cross. So obviously this period of consolidation may or may not be coming to an end, but I just want to sort of focus in on these lows now. Right, so then we've got the weekly. So if we go to the weekly chart, we could tighten up this support even more. So I'll just drop that down to there. So this now encapsulates all of these lows back from 2016, and then these from around 2020. If we go to a candlestick chart, we can see now that the push down into the 0.828 double bottom. So for me, when I see a double bottom, that is where people who are long, that's where you put your stop, because that looks like a decent support, and that's where traders put their stops, and then they see prices rally up here and it's all good. But once price comes back down, then they start to get a little bit worried, and their stops are generally good targets for liquidity. This is a weekly chart, so we're still on big time frame stuff. The red, green, blue is now bearish. You can see that this consolidation period on the weekly chart is now turned into a downtrend. We've got lower highs and lower lows. So support was here, and we didn't retest it. So we don't know if that's now resistance. Obviously support is here, and we haven't tested that yet. And I'm saying that's where liquidity will be. This large red candle here is where the last of the sellers were. yeah, these guys sold into whoever was buying this. So last of the sellers, and then these are the buyers. So there's actually a lot of demand down there. So we're actually turning into a demand area. So I'm just going to put another box here, and I'm going to label it green. So this is just trying to build up some sort of story about who's doing what and where and why. So we're basically coming into this demand area. We know that there's liquidity there. So if the sellers are going to push through, they're targeting the 0.824. And if they do that, then they might as well push down to this swing high here, because we know that was resistance. So we might as well test it, see if that's support. So a couple of targets to the downside. We know there's dynamic resistance above because of these are the moving averages. We see that every time the sort of euro versus the pound pushes into these weekly moving averages, it rejects. So we know that's sort of dynamic resistance. And we know that the next sort of hard line, if you like, the sort of ceiling could be up here, 0.887. If we look left again, we've got this big push up, pull back. So that's support. That did become resistance. So again, maybe we could say that's resistance, as in tested resistance. So we can make that red. And this is just building up a picture of, who's doing what and where. Right. So now I'm saying that there's quite a lot of resistance above, both dynamic and tested. We're in a demand area. So we just need to know if there's still going to be buyers there. And then we've got some targets below where we either sweep this double bottom before returning higher, or we come back down to the 0.804. Right, going down to the daily. So if I was long, like how many percentage was it? 88% of the traders. So if I'm long, I'm about to puke my position probably here at 0.8448. That's where, the most recent stops were going to be. And if we look now here, we had a rally up, pull back, and then another rally, so an ABC. We had this B here, got broken on the 7th of October, 2021. Went sideways, tested into it, failed. So that's definitely daily resistance now. I'm just going to make this solid red so you can see it. So whatever we do, if we put our stops up above this swing high here into these moving averages on the daily, that's where we're wrong, because we're saying that this is now old support, now resistance. So if we get back above there, chances are that we go up and test higher highs. I'm saying that this level here gets swept at least today. And then we get pushed down into this demand zone between 0.847 and 0.83. So, there's a good chance that we keep going down, just testing this stuff. But if we get an acceleration, we go back to the weekly chart and we're just going to target this. So if we go down to an hourly, how could we use this information now for an actual trade? So what I'm looking for is stuff like this where, we break support and then we test it, see if it's resistance. Clearly it's not. So the next one will be break this one. So if we get a move down and then a return to this level, 0.845, get a rejection, either an engulfing candle like this one here or a spiky wicky one here, then that's a signal that we can go lower and start testing into this, lower 0.84s down to the 0.83s. So that's how I'm thinking we play this downtrend. We're just aiming to get as close to this double bottom as possible on the weekly chart. We're using the sort of daily momentum and price action. And we're going to try and get in on an hourly chart so we can mitigate our risk. Obviously I said up here is where the stops could go, because that's where we're definitely wrong in terms of like my higher time frame analysis. But obviously, if we can get a pullback and then a continuation lower, then we can put our stop up here, or even, you know, if you want to be a bit more conservative, up here. So if you do that, then you've got, so say we use this swing high here and we use this level as our short, then you've got that much risk. So then you want to be looking for twice as much in terms of profit. And then if I go back to the weekly, because we can then see, you can see here that these levels of sort of profit taking, if you like, still haven't quite made it down to here. So then you can go from being like a risk of 1 to 2 to actually more like, if that's your risk, 1 to at least 4, 4.5. So you can have a risk to reward ratio of 1 to 4. And yeah, then you might even get a follow through for, you know, like these levels down here. So that's the kind of trade I'm looking for. I'm looking for a high probability short in line with the sort of higher time frame momentum. I'm looking for old support to become resistance. And then I'm looking for, you know, like an hourly or 30-minute chart sort of confirmation that the, you know, the supports that are being broken turning to resistance. And then I'm looking for at least a 1 to 2, if not larger, risk to reward ratio. All right, if you've made money this week, I hope you keep it today, and come back next week and we'll catch you again.